Apple issuing a warning on shipment delays of its high-end iPhones as the tech giant navigates production disruptions in China following lockdowns due to COVID-19. Joining us now for more on this and the latest in the tech sector is Daniel Flax, Neuberger Berman Senior Research Analyst. Daniel, good to see you this morning. So what are the longer-term implications of Apple pulling back on production here?
Good morning. I think the near-term dynamics around supply being impacted is obviously a little bit negative, but I think what's going to matter in the near term and certainly for the longer term is that demand for the products is healthy. The Pro and the Pro Max, a good initial reception as the product cycle gets underway. And then I think the bigger story, really this broadening of the revenue drivers across Mac, iPad, wearables, services remains healthy. And so if Apple is able to continue executing on its product cycles, I think the next 1 to 2 years will be a good time for Apple and a good time for their shareholders.
What does that mean for the kind of super cycles that we've seen in the past? Does that put us at a super cycle in 2023, or are we looking at 2024?
I think what we're going to see next year and beyond is really this continued growth of the installed base. The smartphone market is certainly more mature than it was 5-6 years ago. But what we're seeing is that Apple is able to continue innovating. Think about the camera. Think about the dynamic island. Think about all of the features and functionality that's delivered in a fun, easy, and secure way. And so as long as they're able to continue doing that and expand the install base here in the U.S., in China, and really globally, I think that will help underpin the iPhone growth. And they've demonstrated throughout the pandemic and certainly in a tougher economic environment that the iPhone franchise is durable, which is certainly a key part of the longer term story.
Daniel, I'm a little surprised by the continued optimism on Apple. Often an announcement like this, and I get it's Apple, lots of cash, leadership, market position, but what do you think would turn investors bearish on this name? What has to happen?
There's certainly going to be continued macro and cyclical headwinds, inflation, higher interest rates, pockets of weakness in the consumer. Those are real factors, and those are having an impact on Apple and many other companies. I think it's going to come down to the innovation and really their ability to empower developers. If we step back and think what's happened since the iPod about 2 decades ago, this is a story of continued innovation and reinvention, and Apple has paid out over $260 billion to the developers since opening the App Store. So this platform they've created and really empowering others to build on top is what I think is part of the magic of the story. So that's what we're focused on, and they need to continue to do that regardless of the economic cycle in order to create value for their customers and then ultimately their shareholders.
So this is at a time where we're seeing waning smartphone demand, but also waning PC demand, or at least a lull in that right now. One of the parts of that continued reinvention story for Apple has been recognizing where some products have actual user experience synergies with products that are actually seeing growth. And so where is the kind of, on a product scale, that next product that may need to drop for Apple so that it can reinvest into some other parts of at least its hardware business?
Well, what we've seen with the Mac and really the M1 and now the M2 Silicon is that they have reinvented the product category. And certainly while quarters can remain volatile due to product cycles and economic cycles, the business remains healthy and the Apple Mac install base is continuing to grow. If we step back and think about where the company may go over time, there's certainly, I think, investing and working on products in areas like augmented reality. But the key for Apple is really to get this user experience right and pulling together the hardware, the software, and the services in ways that they've done in other areas. So, for example, Fitness Plus. And so that ability to harness what they can do internally and empower developers, I think, will be important in a world where you'll see augmented reality devices. Again, over time, the key is to get the experience right.
Interesting. Okay, so since you mentioned services, is there any historical correlation that would say during a kind of down demand period for some hardware that you actually see services start to experience a more outsized growth rate?
What we've seen during the pandemic in the last couple of years as people have been engaging more with digital, say, than physical services is that the App Store and Apple's broader services platform has done exceptionally well. And I still see good long-term growth prospects as they continue to deliver new services in areas like fitness, as one example. The key in terms of the tie with the products is that where they can pull everything together in a fun way, they could monetize it more with products in other areas, and they're investing more in TV, as an example. They can deliver value in services. Ultimately, though, what will matter in my view to the Apple story is nurturing and investing in the ecosystem and helping people realize value from a lot of different products and services. And so while growth rates for a given product category or services more broadly will certainly remain volatile quarter to quarter, I think the longer term trajectory will be positive for the company, but it's ultimately going to be about them delivering value to their customers.
Daniel, do you believe that this announcement for Apple will hold back valuations on Apple competitors?
In the very near term, I think the market's going to remain a little bit worried about some of the impacts on supply. Certainly, the broader smartphone and the PC market is being impacted by inventories. I think as we get into the first quarter of next year and really look into the latter part of 2023 and into 2024, we'll see a resumption of growth in some of these markets. But the companies like Apple that are going to be able to deliver innovative products, that ultimately, in my view, is going to matter more to the growth, because the PC and the smartphone markets, as we think about this next period post-COVID, growth will be flatter than it has been during periods of COVID. But again, we'll see what happens, and you'll likely have some improvement over the next 18 months in important markets like China.
Neuberger Berman, Managing Director at Flax. Thanks so much for joining us here with the perspective and insights on Apple. We appreciate it.
Thank you for having me.